Well, I think Bitcoin is going to just continue to grow. I expect 30% a year on average over the next 20 years.
Wow.
Right now, it's growing close to 40%, but it will decelerate down to 20%. I think the big idea is Bitcoin is digital capital, and the S&P index is equity capital. You know, if you expect the equity capital to appreciate 10 to 12% a year, digital capital will be better by 50%. If you were expecting 12% from the S&P, you probably get 18% from Bitcoin in 20 years out when it's mature, when it's $100 trillion plus. Right now, it's a small asset, and so it's going to grow faster.
Looking ahead, Saylor remains extraordinarily bullish on Bitcoin. Although he expects Bitcoin's growth rate to gradually slow as the asset matures, he still projects annual appreciation rates that exceed those of traditional equities. His reasoning is based on several unique characteristics. First, Bitcoin is global. Unlike the S&P 500, which primarily reflects the American economy, Bitcoin is accessible to nearly everyone worldwide. Second, Bitcoin operates continuously. Traditional stock markets close on evenings, weekends, and holidays. Bitcoin trades 24 hours a day, 7 days a week, every day of the year. Third, Bitcoin's supply is fixed. No central authority can create additional Bitcoin to dilute existing holders. Finally, Bitcoin functions as a commodity rather than a corporate security. Because it has no issuer, no CEO, and no central governing company, Bitcoin can be traded globally with fewer restrictions than many traditional financial assets. These characteristics, according to Saylor, make Bitcoin uniquely positioned to become a dominant form of global capital.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin is digital capital. So Bitcoin has been appreciating about 40% a year for the past 5 years. And that's the good part. It's like it's outperforming the S&P by a factor of 2 or 3 or more. It's over the last 15 years, it's the best performing asset in the world. That is, a Bitcoiner would say that's scarce desirable capital or scarce desirable real estate in cyberspace. There will never be more than 21 million Bitcoin. So if you start with this base of 21 million Bitcoin and you think everybody in the world wants some property that they can take with them, if I need to move from Europe to Africa to Asia to UAE to the US, you can't take your building with you.
Right.
You know, it's going to be hard to haul a bar of gold through an airport, you know. So if I want to hold wealth in my family for 100 years, what am I going to buy that ought to have value in 100 years, no matter where I am? If I don't trust a bank, if I don't trust a government, if I don't want to run a business for 100 years.
Yeah.
And so Bitcoin becomes that store of economic wealth, right? It's pure capital. Now, the good thing about Bitcoin is because it's scarce and it's digital, it's very liquid, it's very useful. Yeah, you can sell $1 billion of Bitcoin in 1 minute on a Saturday morning, or you can buy it back, and it makes it very volatile. The bad thing about Bitcoin is it's a very volatile capital asset.
Right.
So that means that if you're going to buy it, you need to think, I'm going to hold it for 4 to 10 years, ideally 10 years.
Yeah.
Long time. So can you go for 10 years without needing any money, right? I'm going to give you something that will make you rich in a decade, but you're going to have to hold your breath and live on scraps for 10 years. So we looked at that, and there's a whole set of investors that can't afford to go 10 years with that kind of volatility. 3-year-olds, 20-somethings, a company. And we thought, let's create something more like a bank account that pays you 10 or 11% and back it with Bitcoin. So Stretch, STRC, is a digital credit instrument. And the way it works is we sell this preferred stock into the public market. We IPO'd it. You can get it from Robinhood. You can find it on Charles Schwab, any broker-dealer that deals with NASDAQ listed preferred stocks. The stock pays a monthly dividend. It pays a monthly dividend that's variable. Right now, that dividend rate's 11.5%. So you have $100, you buy 1 share of STRC, you get paid $11.50 in 12 monthly installments, right? Now, we take the $100 and we buy $100 of Bitcoin with it. So the company strategy is in the business of holding the Bitcoin for a decade, taking the ups and downs. We'll take the volatility, and then we strip the risk off it. So for example, if you bought Stretch on October 6th of last year at the top of the Bitcoin market, you buy it for 100, Bitcoin was 125,000. Well, Bitcoin's fallen about 40%. It's a 76,000 or something. STRC is still 100. So we're preserving the principal, and then we're giving you a constant stream of dividends. Now, to be clear, it's not as good as holding the Bitcoin for a decade. It's better than holding it for 6 months through a bear market.
Right.
And so Stretch really is an example of us stripping the risk and the volatility off of the Bitcoin and giving you a fraction of the Bitcoin return, but in a predictable monthly fashion as cash flow. You put your finger on an important idea, which is with capital investors in equity, normally you get to buy the equity and you hold it and it compounds tax deferred. So like you buy the S&P index and you never sell it, and you might have a big capital gain in it, but it's an unrealized capital gain.
Right.
So you get tax deferred compounding with equity. You get tax deferred compounding with Bitcoin. With credit, you don't. When you buy a corporate bond, there is no tax deferred compounding. When you buy a normal dividend bearing preferred stock, there's no tax deferred compounding. You have to pay the tax on every dividend when you receive the dividend. STRC is unique because there's 3 types of tax treatment. The first is ordinary income for corporate bonds. That's bad.
Right.
The second is qualified dividend distributions for preferred stocks. That's half bad. The third is return of capital dividends. That's great. So return of capital dividends have been around for 100 years. But it's very rare for a company or a bank to issue a dividend-bearing credit instrument that's return of capital. We pioneered creating that type of instrument using digital capital. So if we sell a bunch of STRC and then we buy a bunch of Bitcoin, and then the Bitcoin compounds over time, and it's a big unrealized capital gain for us, we monetize that unrealized capital gain. And then we do that normally by selling our stock, our common stock. But we could also sell the Bitcoin to monetize the capital gain. We monetize that unrealized capital gain, and then we pass it through as a dividend, so it becomes a tax-deferred dividend. So it's good financial engineering, and it just makes rational economic sense. If you don't need the money for a decade, and you can afford to make a long investment, and you don't want to be beholden to anybody or trust anybody, I say buy Bitcoin. Bitcoin is like global digital capital, no counterparty. You can take it with you anywhere, right? If, on the other hand, you need the money in 12 months or 6 months or 24 months, and you can't stand the risk of, it might trade down 20%, then you want to buy the credit instrument because all of the efforts of the company are to keep that pegged around $100, right? And then you're just picking up the 11%, and that's 3 or 4 times better than your money market.
Yeah.
Everything in the middle, like other types of credit, corporate credit, junk bonds, you don't get paid for the risk you take. You get 80 basis points more than the government rate to buy an investment grade bond.
Really?
You get 200 basis points more than the risk-free rate from the government to buy the junk bond, or 250. And so, what's the point of that? You're taking massive credit risk from those companies to get paid a little bit, and then you're getting taxed, at the ordinary income rate. And so bonds are not that interesting. Digital credit is designed to have the benefits of equity, double-digit returns, deferred tax treatment, and the benefits of credit, low volatility principal protection. It is the most liquid preferred stock in the world, right? Right now it's about $400 million, $380 million of liquidity a day. So you can trade in and out of it whenever you want, which is a nice thing. The other thing we've done with Stretch, which is very useful, is there's a concept, risk-adjusted return, and it's captured by the Sharpe ratio. It's a metric that financial engineers use. It's what is the return of the investment minus the risk-free rate. The risk-free rate is SOFR. The standard overnight funds rate is 370 basis points. It's what the government pays you on their T-bills. So if you take the return, subtract the risk-free rate, divide by the volatility, you get a Sharpe ratio. And the Sharpe ratio of the S&P is like 0.85. Yeah, you have a higher volatility than the annual return. The Sharpe ratio of Bitcoin is around the same. The Sharpe ratio of most credit instruments is 0.2 to 0.4, and the Sharpe ratio of money markets is negative. The Sharpe ratio of STRC is 2.8. It's 10x better than other credit instruments. And if you were running a hedge fund, and you could say, look, the volatility of my portfolio was 10, but my return was 20. That'd be a Sharpe ratio of 2. You could raise infinite money. I mean, people would give you money all day long because they're like, you're a financial genius. We've created something with a Sharpe ratio of close to 3, and we've created 380 million of liquidity. And so the real engineering feat is, how do I create hundreds of millions or billions of dollars of daily liquidity with a Sharpe ratio north of 1 or north of 2 or 3 or 4? If you do both, right, you've created a super liquid hedge fund, better than a hedge fund that charges no fees with no lockup. Well, I think Bitcoin's going to just continue to grow. I expect 30% a year on average over the next 20 years.
Wow.
Right now, it's growing close to 40%, but it will decelerate down to 20%. I think the big idea is Bitcoin is digital capital, and the S&P index is equity capital. If you expect the equity capital to appreciate 10 to 12% a year, digital capital will be better by 50%. If you were expecting 12% from the S&P, you probably get 18% from Bitcoin in 20 years out when it's mature, when it's $100 trillion plus. Right now, it's a small asset, and so it's going to grow faster. And the reason it's going to outperform equity capital is because it's global. I mean, the S&P is mainly U.S. And because it's digital, you can buy and sell Bitcoin 100 times an hour on a weekend, but you cannot buy and sell the S&P stocks at all. So it's actually more useful. Yeah, you can lever it. You can short sell Bitcoin 20 to 1 levered in Singapore on Saturday morning. You're not doing that with the S&P index, and you're not doing it with like New York City real estate either. So there are a lot of capital assets, old masters paintings, good real estate, beachfront property, good companies, equity. But Bitcoin is the advantage of, you can't make any more of it. Everybody in the world, the Chinese recognize it, the Russians recognize it. Your enemies like it, your friends like it, the Europeans like it, the Americans like it. It is truly global. Everywhere in the world, you'll find people that would take it from you, buy it from you, or...
Perhaps the most powerful idea in Saylor's vision is the combination of digital intelligence and digital capital. Digital intelligence refers to artificial intelligence. Digital capital refers to Bitcoin. Together, he believes these technologies can create entirely new financial ecosystems. Because Bitcoin exists entirely in digital form, financial products can be created, distributed, traded, and scaled at unprecedented speeds. Billions of dollars can move through these systems almost instantly. Compared to traditional industries like real estate or manufacturing, where projects may take years to develop, digital capital markets can evolve in real time. This speed, efficiency, and scalability form the foundation of Saylor's long-term outlook.
Trade it with you. And it's a commodity. And a commodity is very important because a commodity means an asset without an issuer. And that means that anybody can trade it. There are 1,000 exchanges that trade Bitcoin. Whereas if it was designated as security, like Apple stock or NVIDIA as a security, you have to be a registered broker-dealer or a registered exchange, and there are rules. Like when can it trade? There are a ton of rules about disclosure. And so no one is ever going to meet a random dude and trade some Apple stock for a Jeep in Africa on a Saturday afternoon. But you could definitely do that with Bitcoin.
Right.
So it's just more useful because there's no government that dictates to you, for example, what you can do with your firewood or what you can do with your oil, their commodities, or your soybeans,
right,
or your Bitcoin, right? If it's a commodity, it's beyond securities regulation, and that makes it useful. And that means entrepreneurs can create a mobile app on an iPhone or an AI app. And you're like, I'm just going to go ahead and trade it or vibrate it 1,000,000 times a second. And I've got this idea to do something with it. And so when 1 billion AIs come up with 1 billion trading ideas with 1 billion other AIs, and they're doing it while you're sleeping, that's happening with a digital commodity. That's very, it might be illegal with a security. Like,
for sure.
It's literally, you can't do it. So you have a good idea, but you can't implement it because of regulatory constraints. We are business intelligence software business. That was our first product, and we injected AI into it, and that's made the product 10 times better. But the most valuable use of AI is we used AI to design STRC.
Really?
So when we create our digital credit instruments, we take digital intelligence, which is what AI is, and then we say we've got some digital capital, which is what Bitcoin is, and then we want to carve a credit instrument out of the capital. We didn't just create Stretch. Stretch wasn't the first thing we did. We actually created a product, STRK, Strike, which was a convertible preferred stock. And then we created Strife, which was a fixed preferred stock that paid a 10% dividend forever. And then we created Stride, which was a junior fixed dividend stock. And Stretch was the fourth thing we created.
Wow.
And you could think about digital capital like a block of plastic or Lexan or something, and then I've got a computer-generated milling machine, and I want to mill a picture of a beautiful woman or a jet airplane or a pineapple. I just put the design into the computer. The 3D printer or the milling machine spits it out of a block of just pure Well, Bitcoin is like that. You can carve out any amount of volatility, any amount of yield. If I wanted to create something that was yielded 6% a year in yen, I can carve that from Bitcoin, right? And so the trick is you need digital intelligence to design the security. So we actually took AI, digital intelligence, we created STRC, and the idea is let's create something that is like a money market, like a very stable instrument. And we had to have a shelf registration paired with a variable monthly dividend, paired with a flexible ATM program. We put a call option above it, right? And what pops out is the security itself, which then we take public on NASDAQ.
Yeah.
What I would tell you is it never would have come to life if we didn't have AI, because no one in the history of the world ever did this.
Wow.
This is the first variable monthly rate preferred stock in the world. No one ever had a variable credit spread on a preferred stock. So we were doing something no one had done before. When you go to a banker and say, I want to do it, they're like, well, no one does that. You go to a lawyer, I want to do this. They're like, well, no, that's never been done before. Well, do you think I could do it? Well, I'm not sure. I've never done it before. I'll get back to you in a month. Maybe it'd be better if we don't do it. So when you approach bankers and lawyers or people who are in the business for 30 years with a brand new idea, especially if it's a financial idea, everybody's very risk averse.
Right, especially.
So their response is, well, I don't know, it'd be much safer if we just didn't do it. Yeah, but if we didn't do it, we wouldn't create billions and billions of dollars of value for the shareholders, right? And so with STRC, we did something that had never been done before, but you ask the AI, you're like, well, can I do it? Yeah, no one's done it, but yeah, it's totally legal. It's totally, there's no Will the NASDAQ object? No. Will the SEC object? No, they should be fine with it. But my lawyer says blah, blah, blah. Well, just tell your lawyer this. So I actually first used the AI to design the security. Then I used the AI to figure out how to explain it to the lawyers. Then I used it to explain it to the bankers. Then we used the AI to explain it to the investors. So it's all about legal analysis, financial analysis, communication. And what's the payoff? The payoff is a $2.5 billion IPO. And then the payoff is all of a sudden we're selling $3 billion a month. You created a product. And by the way, when we sell $3 billion of STRC, we're basically entering into a perpetual swap with the counterparty. So what happens is we're agreeing to pay SOFR, the standard overnight funds rate, with a credit spread monthly, forever. We're never repaying the principal. And then we're getting back the performance of Bitcoin forever. So if we think Bitcoin's going up 30% or even 10%, we're getting that, and we're agreeing to pay SOFR plus the credit spread.
Right.
Now here's the punchline. if you think Bitcoin is going up 10 or 11% a year, then when we saw $3 billion of credit, we made $3 billion of net income for the company.
Whoa.
In a few days.
Oh my gosh.
Right? You might be, we've sold $1 billion a day. You're making $1 billion in 6 hours in net income.
Holy.
If you think that Bitcoin's going up 22% a year, you made $1 billion up front and another $1 billion on the back end.
Wow.
And so, of course, this bewilders people, drives them insane, because if you're a Bitcoin hater, you're like, Bitcoin is going to go to zero. That was stupid to do that. But if you're a Bitcoin maxi, or if you believe in Bitcoin, then when you sell $8.5 billion of credit, you made $8.5 billion of net income.
That's insane.
We can't call it that because it's not a gap term. It's analogous to, we would call it BTC gain, a Bitcoin gain on the trade. And, we've had, I don't know, $5 billion of those gains in the first 4 months.
That's incredible.
And so you wouldn't understand it without AI, right? What I'm describing is, you want to create a lot of money in a hurry. A good thing to do is pair digital intelligence with digital capital, with digital assets, sold on a digital distribution channel, marketed with digital communications, right? Just pure digital. When somebody buys $100 million worth of digital credit from us in a day, we create $100 million of collateral we buy 100 million of Bitcoin the same day.
It's 1-to-1.
So if someone's buying $100 million an hour, we're buying 100 million of Bitcoin an hour. Now, imagine if you were doing this with real estate. Someone gives you $1 billion and you have to go build $1 billion with buildings. So when we sell $1 billion a day, we're creating $1 billion of a digital building the same day.
Right.
So the capital cycle, the cycle is insanely fast.
Yeah.
Right? Because it's pure digital. That's what makes this work so well. If you want us to create $10 billion of digital credit, we can create $10 billion of credit with $10 billion of collateral. And we've got a Bitcoin market that trades 50 billion a day.
Wow.
That we can work in. So sometimes we're buying $100 million of Bitcoin an hour, and we're creating $100 million of credit an hour. And that's making us $100 million of net income an hour. $100 million of BTC gain an hour, right? And if you're a BTC hater, you don't want any of this, right?
Yeah.
It's fewer and fewer. People are starting to, Bitcoin is now being embraced generally as global capital, as digital capital, and the consensus is flipped that it's capital. And, if you look at the senior regulators, the head of the SEC, the head of the CFTC, the head of Treasury, Warsh, who's the incoming head of the Fed, they're all pro-digital, pro-innovation, pro-digital assets. They believe this is going to empower the people, enrich the nation, impart a benefit to the world. So we as does the President of the United States, who wants us to be the crypto capital of the world.
Yep.
He's the Bitcoin president. So Donald Trump's a believer. The people in the administration are believers. We've got the most pro-digital assets and pro-Bitcoin administration that we've ever had in the history of the industry. And everybody else in the world copies us. It's not just in the UAE, but Europe, the UAE, South America, and even China and Russia. Even our enemies copy us. If when we're doing these things, right? They might want to do it with their twist, but the real point is we've crossed the event horizon, or the inflection point. The last 5 years or 4 years was the industry struggling for legitimacy, but the next 4 years is really hyper-growth.
Michael Saylor's message is ultimately about transformation. He believes Bitcoin has already crossed the threshold from speculative experiment to legitimate global capital asset. In his view, the last several years were about achieving credibility and acceptance. The next several years will be about expansion and adoption. Whether or not investors agree with every aspect of his thesis, the broader implications are difficult to ignore. Bitcoin has introduced a new form of scarce digital property. Artificial intelligence is reshaping how financial products are created. And innovative structures like STRC demonstrate how traditional finance and digital assets are beginning to merge. Saylor sees a future where Bitcoin serves as the world's digital reserve capital AI becomes the architect of financial innovation, and entirely new asset classes emerge from the combination of the two. The question is no longer whether digital assets will influence the global financial system. The real question is how large that influence will become. And according to Michael Saylor, we're only at the beginning of the story.